everyone. I'm Noelle with Verivest, and with me today I have Babek Tamadan and Mark Gagne from Bay Housing Investments. Hi guys, how's it going?
Great.
I know. How are
Great,
you? Hi,
awesome.
everyone.
Thanks for joining. Let's get right into it. Tell me, both of you guys, I guess, tell me your origin story, how you got to where you are today. Um, yeah, how you got started.
Thanks, Noel. Hi, guys. I'm Mark Gagne, one of the managing partners of Bay Housing Investments. And I'm a native Californian who grew up and still resides right here in the Bay Area. I started my career in tech sales and eventually bought a small tech business, which has provided me a steady income while allowing me to pursue other interests. It was in 2011, still deep in the recession, when a good friend invited me to Fresno, California, to show me how he was buying foreclosed homes for 30 cents on the dollar and then profitably renting them. And that's where I started investing. Later, I diversified into Atlanta and then did student housing in Philadelphia, and eventually circled back to the Bay Area where I started flipping homes. And then in 2014, I met Babak at a conference on syndicating large apartments, and we've been doing really exciting multifamily deals ever since. I'd like to wrap up by sharing a brief story. About the same time I'd met Babak, I took the opportunity to help raise funds for a large Texas apartment syndication. It was a deal that looked great on paper. I mean, it had a strong preferred return and an amazing projected IRR. But it turns out that it was far too good to be true. And unfortunately, we've seen this pattern repeat itself over and over within the network of investors that we've met. So I'll highlight here that we're different. We've structured a fund that provides double-digit monthly income with no fees from day one, and with a certainty you will not likely find with any other equity funds. And that's a little bit about me and where we're going.
Awesome.
All right, thank you, Mark. Hi, everyone. My name is Babak Tamadan, and I'm a managing partner also at Bay Housing Investments. My origin story. My interest in real estate started during the last economic downturn. I was still a student, PhD student at UC Berkeley, and I realized that opportunities are popping up everywhere. And it was very important to look at real estate because you could tell that you couldn't buy a house even on a professor's salary. So I started taking courses in real estate development at Berkeley, and that was around 2010, I think 2009, I can't remember exactly, but I bought my first value-add property, multifamily property, right out of the graduate program. And Mark and I had partnered up while taking multifamily investment courses where we were told that California properties don't cash flow. And so we dug around a little bit further, dug deeper, and we realized that, the aha moment was basically when we realized that we could have cash flowing properties right here in the Bay Area if we pursue a value add strategy. So we acquired more properties and we became more convinced that our formula works, and then we started scaling the business. As Mark mentioned, the only other issue was really how to show that we are reliable partners and that we are reliable sponsors and that we can deliver exactly what we say we will deliver. So that's basically my story.
Great. Awesome. What is your guys' acquisition strategy? How do you source deal flow?
So I'll take that. Well, we basically look for the proverbial needle in the haystack, and that takes time. We're not a volume shop. We only execute when we find the exact right property and that basically allows us to execute our deep value add strategy and generate the margin of safety that we want for ourselves and our investors. In terms of how we find the deals, over the past decade, we've developed relationships with local brokers who know our criteria. They bring us off-market deals, basically. And we also have a team who scour the listing services, like LoopNet, MLS, and so on and so forth. And finally, we have a direct outreach to owners. Again, we have to follow a number of strategies because we're very, very selective about what we buy.
Awesome. What key markets do you guys operate in, and why do you operate in them?
Sure. So Noel, we operate right here in our backyard. That is the Bay Area. And this home field advantage affords us some pretty big benefits. The most notable is our insight into what really drives property values in each neighborhood we consider. Also critical are the relationships we have with real estate brokers who know us on a first name basis and understand our value creation formula. Having these strong relationships really helps us buy the deals with the terms that we need. All right, besides our home field advantage, there's a combination of other factors specific to the Bay Area which make real estate values here consistently strong and stable. At the top of the list is the region's business climate. We're home to world-renowned tech titans, as well as tens of thousands of other tech companies in every field imaginable, all fed by a network of world-class universities. Second, demographics. We have a fast-growing population of students, upwardly mobile professionals, and new families that move here regularly. Thirdly, we're entirely surrounded by water and mountains, which severely limits the amount of buildable land here. And finally, there are significant barriers to entry, like strict zoning regulations and rent control. All of these factors combine to create a serious housing shortage, protecting us from overbuilding and oversupply. Even after the Great Recession, rents dipped only briefly and then quickly went on to reach all-time highs. And that's it. That's why we love the Bay Area. Yeah,
awesome. What is your guys' investment philosophy, and how do you determine whether or not a deal is worth doing?
So I'll take that, Noel. I just noticed that your previous question had two parts, and I only addressed one part. So just a quick note on acquisition strategy. So basically, we call our acquisition strategy Goldilocks because we have to balance a number of things, and the balance really is between the right property, the right neighborhood, the right price. The right property for us is something that is vacant or ready for conversion to highest and best use. The right neighborhood is basically something is in the path of development. In the Bay Area, it's very often something that has to be transit-oriented with improving conditions for the type of metrics that we're looking for. And finally, the right price. Again, in order for us to create that safety margin, we have to make sure that we buy at a certain price that allows us to create that margin of safety. But I think the next question was investment philosophy.
Yep.
So I think number one, basically, philosophy would be to do exactly what you say you will do. So in our case, a double-digit monthly income with no fees is what we promise and what we will deliver. Number two, to create a win-win scenario for all stakeholders, investors, tenants, sponsors. I think everyone should come out winning. Otherwise, life becomes very miserable, and one of the parties becomes unhappy and disgruntled, and that's not the way we want to do business. And finally, I would say being conservative again and allowing for wide margins of safety when we underwrite and when we analyze. That's, I would say, sums it up.
Great. Awesome. How do you guys generate value once you have made your investment? And then the second part of that question is, what do you do to ensure you get a return?
Okay, all right. I'll take that one too. So, generating value is probably what we really excel at, aside from delivering what we're saying we will deliver. And we basically have a vision for each new property that we buy. So we buy the right price, the right neighborhood, and the right property. And then we guide our architects and engineers to create plans that maximize the number of units, add square footage, bedrooms, baths, other amenities. So it's a deep value add sort of project where we're not just changing countertops. And beyond that, we have our own we have our own crew of contractors who execute our vision per the plans. They do it very economically because we have a long-term relationship with them, and they know that they will get new deal flow from us and new contracts. So we oversee all the details, really, even minute details that will optimize the final product specifically for our target market and for maximizing the rents.
Great.
I believe you had a question about return of capital and return on capital. Is that correct?
Yes. Yep.
Okay. So, yeah. All right. Let me start with return on capital. So, frequently developers will promise a certain return, but after years of investment, investors find that things don't turn out that way, the way that the developer had promised, and things fall short of the targets. So we thought, what is the solution? We're not just developers. We're also innovators. We think of ourselves as innovators. So we came up with a new way to provide these returns from day one while charging no fees again. So with Bay Housing Investments, you don't have to wait until year 3 or 5 or 7 to find out if you made the return that you were promised. We decided we will deliver exactly what we promised from day one. And that takes care of some of the financial risk for the investors. The other risk is, are you overpaying in fees, for instance? Again, this is not something that's particular to real estate. In public markets and equity markets, very often that is one of the driving factors for investors. And in fact, in real estate, it's so bad that sometimes sponsors, knowing they can't increase value substantially, they rely mostly on fees to make money. So we charge no fees, and that's a sign of how much value we think we generate. And in terms of return of capital, right? So this has a lot to do with risk mitigation, risk to physical asset, of course, deploying the best-in-class insurance and risk mitigation strategies. We've been doing that ever since we started. And again, legal asset protection and so on, carrying millions of dollars in liability insurance, for instance. So these are all basically measures that we take and we've been taking from early on. The financial risk, I think our proven business model is really low volume and therefore low risk and structured for the long-term hold. Because of that, as an example, we still own properties we purchased early on in the last real estate cycle. So again, unlike most developers, we hold on to our properties. We don't wait for the exit to make that profit. And the structure allows us to provide a consistent, reliable monthly return. But it also requires us to be very, very disciplined and to keep equity in the deal after we refinance and return our investors' capital. So basically, by being conservative in our purchase criteria and following that deep value strategy, if you will, we've always been able to return all the capital to the investors as well as all the interest per schedule. And that's what we're sure that we could be doing that in the future as well.
Awesome. Wow.
And I think that concludes it.
That's a great answer. Okay, last question. Who are the key players involved that allow you guys to execute your acquisition strategy?
Well, I'll take that last question. So each project we do really is a collaborative effort. And when you depend on your team as much as we do, everybody has to be on the same page day one. Meaning, Bobak and I have to, from the beginning, articulate our vision and strategy so that everyone understands their role. Let me share a story. In 2019, we purchased an apartment building that had been on the market for nearly 5 months. Our acquisition manager had seen this property early on, and although it was a good strategic fit, it didn't meet our price criteria. Then suddenly in May, there was a substantial drop in the asking price. Less than 24 hours later, 10 a.m. on a Saturday morning, we met the listing broker and walked the property together. It didn't take him long to realize that we saw something that others hadn't and that we closed quickly, and he could, after many frustrating months, finally be done with this deal. So by 11 a.m., we all agreed on a strategy that would convince the seller to accept our offer. Essentially, it took one meeting and 1 hour to recruit a key player crucial to making this deal happen. In another case, earlier this year, COVID restrictions almost scuttled a really promising deal. But fortunately, our broker was able to persuade a very reluctant seller to come back to the table and get the deal done. Why? Because we had a strong track record doing many deals with this broker, and he knew what we were capable of, no matter the environment. So I think these are good examples of how we appreciate the critical role that each professional plays in making our project successful. And with that said, we're always cultivating those relationships ongoing. And in the end, for us, it makes a huge difference. And that's really hopefully shows the value of our entire team as we move through these projects and finish them up.
Awesome. Thank you guys so much. It was so nice getting to know you and learning about your company. Thank you so much for joining me.